I would narrow it a bit. I think, $82 seems like an appropriate ceiling.
Very specific. Why 82?
But I'd have the asterisk there saying, if something goes wrong, because now we're dealing in a market that's full of wild cards, imponderables, geopolitics. Look at all the moving parts there. What's Netanyahu going to do? What are Hezbollah and Hamas going to do? I mean, I found it interesting that over the weekend, everybody expects the Iranian retaliation. When you take out, Hezbollah leaders in Beirut and allegedly an assassination of the Hamas political leader in Tehran, you expect Iran is going to retaliate, but yet Israel preemptive strike. 100 warplanes, and
Sure.
Iran had to retaliate, but I'm not sure that's over yet.
So while tensions are escalating in the Middle East, I think for a lot of oil traders, what they're watching out for, and perhaps one of the reasons why the oil market has not gone crazy on the back of Middle Eastern tensions, is because they're not seeing any major supply disruptions because of this conflict and, threat to the Strait of Hormuz, which controls 20% of global oil supplies. Do you think that that's perhaps the market being a little overconfident? Because we're talking about a highly emotional market, a market that's super sensitive to geopolitical situations. And if tensions were to hit the market, then they would have already done so by now. The fact that the market is still balanced, doesn't that indicate that the market is a little more comfortable about the supply situation right now?
I would agree with your view that really the geopolitics doesn't, with the exception of Libya, doesn't really change the fundamentals here. We're all awaiting, what's going to happen with demand. But I think there's an argument to be made that longer term we could see a recovery. Now, we are all, another wild card, the Fed, Jerome Powell, Jackson Hole, says the policy has to be adjusted. Well, next thing traders are going to say, okay, how much? 25%, 25 basis point cut at the next meeting. We see a 1 point cut by the end of the year. They're trying to factor that in, but if that materializes, and I'm a bit skeptical, we also have a U.S. election coming up. We've seen raging inflation during the Biden administration. They would love to see that come down just before the November elections. But long term, that will be, I think, supportive for oil markets. So I'm really not a bear in any sense of the word.